All right, so today I want to talk about freelance consulting and specifically one of the most common myths around Salesforce freelance consulting, which is that you won't have access to a retirement account or that not having an employer retirement account is somehow a burden to you as an independent consultant or freelancer. And this is a huge myth, and we're going to talk in this session about why actually having your own retirement account outside of your employer is likely much more beneficial than having your employer account. So, in this session, I'll be talking to one of our top freelancers from the freelance course, and she's been extremely successful in the freelance space to the point where she has multiple clients on the side and needs to dig into some of these more advanced topics like how to handle retirement accounts as an independent consultant. So we're going to talk about that some today. There are a lot of myths to freelancing, and I just like to put those out there. If you're new to the idea of freelancing, you'll also hear me call it independent consulting quite a bit. Don't worry, you can dive in. We have a full playlist on the YouTube channel that jumps into a lot of different concepts around freelancing. And if you're already a Salesforce professional, it's basically just using the skills you already have to make money on the side, and far more money than you're going to make doing any other side gig or side hustle or whatever else. So if you're trying to make some money on the side, or you want to just go into owning your own business, the freelance course is a great way to do that. We also have a free course, which is down in the description below, as well as the paid course if you're interested. I hope you enjoy this conversation between me and Rachel, and we're going to talk a little bit about the solo 401k and how it's actually more beneficial to you as a freelance consultant than having an employer 401k.
Are there strategies that, as being a sole entrepreneur that we should consider, to make sure that you are doing the best for yourself within the law, right?
Yeah. Yep. I 100% agree with that. And if you get involved in the financial independence community, like there's this whole community of people interested in this concept of financial independence.
Yeah.
And this is a lot about what we talk about in those groups.
Okay.
It's just like, how do we do this? And a lot of people just go right over the line and they're like, nope, if I get audited, I'll pay it back, but this is my money. So I don't go that far because like I've got, business has been good for the past 6-7 years, and there's a lot at stake to sort of play games with that. So here's the biggest thing, and I think this will get rid of a common myth around owning your own business also.
Yep.
A lot of people are like, hey, what about the 401k? And what a lot of people don't know is that as an independent business owner, you can just create your own 401k for free. And this is called a solo 401k. So if you're taking notes, that's a note to take. The solo 401k is like probably the biggest hack as far as owning your own business goes. And I'll tell you why. I'm actually going to Google it right now. But what the solo 401k does is this is your own personal 401k for your business. Now, if you work a full-time job and you've already got a 401k, you have to determine if you want to use a business 401k or your own 401k. So you can't just play in both. You've got to use one or the other.
Oh, isn't that interesting? Okay. All right.
So keep that in mind. And typically, if your employer matches you on the 401k at work, typically stick with that. Typically. If they don't match you, it's probably going to be best to go with your own solo 401k. And we can talk about, why that is so valuable. So I'm looking at the contribution limits, and this is what is really interesting. Okay. So forgive me for looking down, but when you're contributing to an employer 401k, you are only allowed to contribute up to $19,500 a year. Okay. And most people know that sort of like back of hand math. It's like, okay, I work for an employer. I have a 401k. I can contribute $19,500. And for most people, the Salesforce world is just a different world. Like what we get paid is just crazy. And that's why I'm like so passionate about sharing it with other people. Is just not just the money, but so many different aspects of it. For most people, thinking they're going to put $19,500 into a 401k in 1 year is just not a reality.
Right.
But for most Salesforce professionals, it's a reality, and there's more to come. Like we want to be able to put more. So here's the cool thing about the solo 401k. So I want to get the exact numbers here. Shoot, I don't. Okay, here we go. You can have, here's the max. So the max for a regular 401k at work is $19,500.
Yep.
The max for a solo 401k is $57,000. So that is all tax sheltered money.
Yep.
So it's a beautiful thing when you can take. Now you can take, so imagine you were making $200,000 and you were able to shelter $20,000, the 19.5. That's good, but that's like 10%.
Yeah.
Now at this point, we can take almost $60,000 and shelter that away, which is, that's almost 30% of that income. So when we talk about, do I pay out, do I keep it? And I think that's where a lot of those, like maybe where that kind of question stems from, like, can I just keep money in the business and not pay myself so I can avoid the tax on that? The solo 401k is a great way for most people. And most people, even when they run their own solo LLC, $60,000 or $57,000 is still such a high limit that chances are they're not going to hit that. And if they do, then more power to you. And what happens at that point, a lot of people will ask me, but what about like traditional IRA or a Roth, a Roth IRA or something like that? Typically, if you're talking about that level of income that we're talking about now, like, $200,000, you will be outside of the limits for contributing to IRAs, but you can look that up for yourself. That's another great way to save. It's not tax advantaged, meaning it doesn't avoid taxes for you, but it is a great way to put money away, and it does save taxes long run because you don't pay tax on the interest earned on those accounts or the growth. So those are a great way to save as well, if that's available to you. But otherwise, the solo 401k is awesome. And another reason it's awesome is because you can invest these funds how you see fit, because you are the proprietor of those funds, because it's your 401k. So it's a really interesting thing that comes up with, like, typically at the end of the year, your employer, you'll get this like ridiculous notebook or like just stack of paper that tells you about all the funds and why you should invest in them. And then there's actually a financial advisor who works for that 401k account, and they take a fee of the money you have in there. With the solo 401k, there's no fee on your money sitting in those accounts. And it makes a big deal over like a 20, 30 year period. You're talking about, hundreds of thousands of dollars taken out of your account. So it's a really nice add-on. So when I hear people say, well, I can't leave my employer because they have my retirement account, it's like, you don't want them to have your retirement account, because you can contribute even more and you have more control, even to the point where with a solo 401k, you can do things like buy rental properties and have those as your investments, because they are an investment. But you would never get that at work. They're never going to say, would you like you to use your 401k money to buy a home? No, you can't do that. So there's a lot of benefits there. And I would say, if there's one strategy to implement, and you find yourself in a position where you're like, I have tens of thousands of dollars each year that I want to shelter, I don't need that in my bank account. That's what you should do with it. And then on top of that, there's the things that most people know. But it's have a home office, make sure you have and even if you don't use your home office, just have a bedroom that is your office. And I don't care if you work at the kitchen counter, but write that room off at the very least. And then keep in mind, like, your internet expenses, your cell phone expenses, and then of course anything else. And with this type of business, typically there aren't a lot of those ancillary expenses. You might have a little something here and there, but you're not going to deflect $10,000 at the end of the year. You might be able to save a couple grand. So it's good. It's, you shouldn't sort of look away, but at the same time, it's not exactly like a silver bullet. And I would refer to the solo 401k as pretty darn close to a silver bullet for a lot of that tax advantage. Just keep that. You'll want to look that one up, because what you need to do as part of the solo 401k payment is employer paid. So you're paying part of that as an employer. And then some of that will be from you contributing as an employee. So just keep that in mind. But basically what you do is you just pay yourself. In the profit loss statement, it goes in a little bit awkwardly because it is profit, it is loss, but you want to mark that as not a payment to the employee, rather a deferral to the solo 401k. So that when you're filing your taxes, that is not income for you. You have to keep, because that was deferred before it hit your paycheck, technically.
Understood. Yes.
So make sure that you're not filing that as 1099 like income to yourself. If you want to keep it super simple, you can just use a company like Vanguard, or if you're already using like Charles Schwab or some other investment company, typically they'll have a solo 401k. Now those are going to be kind of limited. If you want like full control, like I definitely want to buy a rental house with this money, then you may want to look into, I forget what it is. There's a little bit more paperwork, but you basically have to give, I forget, but you'd have to Google it, and it would, there's a name for it, but it's a solo 401k, like a unrestricted 401k or something like that. And you can get that set up. But if you just want to keep it simple and put your money in index funds or stocks or whatever else, or in mutual funds, or, you know, whatever feels comfortable to you, then you can just do that through whoever your broker is now, like Vanguard or Charles Schwab or Fidelity or someone like that.
Okay.